Robert McDonald. He's a VP of Exploration for Southern Silver. Robert is he's part of the Mannix Resource Group of companies, and in such capacity, he's been the Vice President of Exploration and Exploration Manager for several publicly listed companies. Of course, Southern Silver, but also Homestake Resources, Valterra Resource Corporation, Duncastle Gold, and Fortune River Gold. Please join me in welcoming Robert.
Okay, thank you very much, Tony, and thank you to the Northern Miner for inviting us once again to present to you all. I'm Rob McDonald, VP Exploration for Southern Silver Exploration, and today I'll be speaking to you about our Cerro Las Minitas, our flagship Cerro Las Minitas project, which we're turning into the next major silver mine in Mexico. Southern trades on the TSXV. We're junior exploration company based out of Vancouver. And yeah, I'll just start off with that. I will be making forward-looking statements, but I also use this slide to indicate people that have worked on the project for us. Kirkham Geosciences has done the mineral resource estimates for the project. Entech Mining, the underground mining design and costing. Asenco, the above ground costing and site design and process flow sheet, as well as MPC worked on the metallurgical work and the process flow sheet for us as part of our recently issued PEA, which we put out in June of this year and then filed in July. So I'll focus on our flagship project, the Cerro Las Minitas. It's a silver, lead, zinc skarn system located in Durango, Mexico. It's currently one of the largest and highest grade undeveloped silver-based projects in the world, with indicated and inferred resources totaling 302 million silver equivalent ounces at an average grade of 255 grams per ton silver equivalent. We're located in a well-established silver mining district in Durango, and we're surrounded by major mining companies. We published the results from the PEA in June, and it calls for a 17-year mine life for the project. It's an underground mine with robust project economics that are strongly leveraged to silver and zinc prices. It features both high revenues and free cash flow. We own the project 100%. There are no royalties on the project, and we've got about $2 million in the treasury, which will help us through this current drill program that we're running, or that we've initiated in the last month, as well as other corporate and corporate objectives, ESG objectives. So in terms of company catalysts, we have an updated PEA, and I'm getting out and speaking to people like yourselves on this, as well as we've just initiated drilling on the CLM project, and I'll touch on that a little bit later in the presentation. And we are also in the process of permitting two earlier stage projects, and again, I can touch on those towards the end of the presentation. But here, just to focus again on Cerro Las Minitas and to highlight the mineral resources. You can see the breakdown of resources. We have 126 million ounces of silver and 2.7 billion pounds of combined lead and zinc within the resource. And we've plotted up where Cerro Las Minitas sits in regards to our peer group. And these are projects, junior explorers with and silver-based junior explorers with projects that are under 100 million tons. And you can see how they tend to fall on, the best projects seem to fall on the leading edge of the grade tonnage curve of our peer group projects throughout the world. And so, of course, so they're versus tonnage versus grade. And, of course, there are larger projects than us, but we tend to have higher grade. And in terms of the total resource size, we tend to be comparable to some of the larger silver, lead, zinc projects throughout the world. Of course, there are projects with higher margin, but we tend to be larger. And so, again, we tend to be at just larger mine potential for the project. So, again, we think we sit in a very good place in terms of that grade tonnage curve and comparable to our peer group companies. Looking at the capital structure, we have 309 million shares issued and outstanding at 24.5, and I think we're trading a little bit below that right now. The market capitalization is just over 75 million. And again, the enterprise value gets down to around 62.7 million. The P versus NAV, though, is 0.15 times, and the enterprise value per ounce in the ground, I believe, is relatively undervalued at 0.15 per ounce silver equivalent. And I believe that there is further upside, especially in a continued rising metal market. We've got around 34% of shareholdings within institutional, including Electrum Global Holdings, who is our largest shareholder. And we get coverage through Red Cloud Fundamental Research, as well as newsletters from the Caesars Report and the Silver Stock Investor. We feature an experienced management team and board with a history of success, particularly in Mexico. When you look down through the resumes of the people involved with the project, you'll see major world-class mines like the Peñasquito mine in Mexico, the San Nicolas deposit in Zacatecas in Mexico, other projects like Nuestra Senora and El Limón and Los Filos. And so it's a group of people that know what major projects look like. They know how to develop these projects and bring them to a production decision, either within the companies that they're operating with or through joint venture or sale of the asset to producing companies for the benefit of the shareholder. And so looking at the project portfolio, we have two earlier stage projects, and they are Oro and Hermanas project. They're located in southern New Mexico. I'll get into those if I have time at the end of the presentation. The flagship, of course, is Cerro Las Minitas. It sits within the Faja de Plata, or Belt of Silver, of north central Mexico. I'll get into that a little bit more now. So this is where the project is located, eastern Durango. And you can see we're surrounded by currently producing and past producing mines. The other feature here is both the proximity to Durango. It's only 70 kilometers to the northeast of the city of Durango by road. And also, again, we sit in the interior plateau, or the Altiplano of north central Mexico. We're not in the mountains. As I like to joke, we're not in the marijuana fields, but out in the middle of the bean fields as well. So it makes it a very safe jurisdiction to be operating in. Zooming in a little bit further, and you can see city of Durango only 70 kilometers away, the airport only 60 kilometers away, power station only 50 kilometers away. There's a federal highway and a state highway running right through the property. There's a rail line that runs to the south of our base of operations, which is Guadalupe, Victoria. It's a town of 35,000 people, and it's only a 10-minute drive, 15-minute drive to get to the area of the Cerro, which is where we have our mineral resources. And this is Cerro Las Minitas. If you've ever taken the road from Durango to Torreon, you've driven right through the project. That's the road off to Torreon. That's the road back to Durango. You can see on the horizon, that's the town of Guadalupe, Victoria, and this is the access road that comes out to the Cerro. And again, Cerro Las Minitas is the hill of little mines that we continue to develop into one large mining district in Durango. And just of note, I mean, mineralization, it's an underground deposit, but mineralization would project a surface about right there. You're really looking at maybe 100, 200 meters away from a federal highway is where the mineralization is localized. You'll be thankful to know that this is my only geology slide in the presentation, and this is a classic skarn system, and it features a central intrusion that acts as the heat pump for the system, a zone of alteration around it, skarn alteration around it, which localizes most of the mineralization. There is some mineralization localized in adjacent structures. You can see the distribution of the mineralization. In this graphic in purple, that's the central intrusion, and you can see as you zip around that much of the mineralization is localized around that central intrusion, with a minor amount, I think it's about 15% of the mineralization in some adjacent structures to the central intrusion. This is, and I show the mineralization, the block model, and grade shells at a 60, 90, and plus 150 NSR cutoff. So you can see the distribution of the mineralization on the western deposits. I guess the key feature here is that you have mineralization on the west extends up to a kilometer below surface, and it's about a 1.3 kilometer strike length in strike length. On the eastern side, The key thing to note here is that mineralization only extends to about 450, 500 meters below surface. And the reason for that is because we haven't drilled it. We identified and developed those deposits later in the progression, and we needed to identify shallow mineralization. And so we focused on drilling above 500 meters, and there is one drill hole. It sits about right here on the project that's below 500 meters. This is very quickly the mine plan, and the key feature here is that there's two portals. There's a western portal and there's an eastern portal. The other feature that you get here is that you can see the areas of the deposit that are mined early. Those there in blue. And you can see on the eastern side, you really start losing your mineralization. You're out of mineralization by about a year 10. So the PEA highlights, we have NPV 5% at 501 million US, 17-year mine life, 14.3 million silver equivalent ounces as your annual average plant feed, over 240 million silver equivalent ounces, including just under 100 million ounces of silver alone. Again, in the plant feed, gross revenues of 4.5 billion and a capex of 388. And then you can see the breakdown in metal contributions with each of the metals as reported as silver equivalent sold and the year. And I guess the key here is that, again, we peak at around 18 million silver equivalent sold in year 6. For the first 8 years, we averaged 14.4 million silver equivalent ounces of metal sold, which is a fairly substantial amount. You can see that in the cash flow as well. Again, good free cash flow in the first 8 years, and then it drops off in part because we lose production from the eastern deposits. Again, just to show some of the sensitivities, and I see I am running out of time, so I'll go through this fairly quickly. In terms of the NPV, post-tax NPV, we have a base case here at 501. Base case plus 20 at 876. And then to answer Ron there, I looked at spot prices late last week, and we've come up to, we're currently at around 850 million at a post-tax NPV at a 5% discount. So again, it's looking good, strongly leveraged to silver and zinc prices. So if you think those prices are going up, this is a good bet to be in. And so further opportunities. We feel that with about 25,000 meters of drilling, you could add another 4 to 8 million tons, and this would all be relatively shallow mineralization on the eastern side. There is further deeper exploration potential. And so, we took about 6,000 meters of that 25, and we've identified proof of concept drilling just to show that the deposit can expand. The reason why we are doing this is that we are looking at blue sky options to the current economics of the system. One of those is to increase throughput. And so we're currently at 5,300 ton per day, or just under 2 million tons per year in terms of production. If we could kick that up to 6,000 or go north of 6,000, but what happens is that your production profile becomes more of a peak as opposed to a plateau, and so you would need more material on the back end so that you could sustain 6,000 TPD of production onward for a full 14, 15 year mine life. Other things we're looking at is increased development grade, increased throughput, and optimization of the circuit. We're also doing the ESG and permitting work that you need as the pathway to production. We've established permitting parameters, baseline studies. We continue our social and government engagement. And so this is the new exploration targets that we have. We're focused on the east side and shallow targets on the east side. In here, but we also want to highlight that there is further mineral exploration potential deep. So you can see the 25,000 meters that I've identified here, relatively shallow, and again to highlight that you have excellent exploration potential at depth for any major that might want to come in and start looking at this as a 20 or 25 year mine life. And this is just the plant site infrastructure on there. I don't really have time, so I won't touch on Oro and Hermanas. And so this is why Southern Silver. We have diverse assets excellent PEA results. We have new and upcoming catalysts, and we're ongoing current drilling on the project with a good projected news flow well into Q1 and into Q2 of 2025. Thank you very much.
Any questions for Rob? Get the mic going. There we go. You know, we asked Chad Williams up here with Honey Badger Silver about his investment thesis for silver. I would be remiss not to get an opportunity to get you. What do you think will be driving silver prices in 2025? Where can they go?
I think they can certainly go higher. I think they can certainly capture where silver prices were in October and go beyond. You know, one of the big factors is that, again, we're looking at a deficit in silver. I think it's up to 180 million ounces is the projected deficit for 2024. And so it's just not getting better. So not only is there the, you know, sort of the bullion side of it where you might see silver react to, you know, to the standard inflation triggers, but also just there's less silver. There's not enough silver for the industrial production as well. So it really is, you know, two-prong effect. And so again, I believe that silver is a great place to be. I think we're well positioned with a mine that's looking at mining upwards of 100 million ounces of silver, and I think we have some, you know, blue skies to look forward to in 2025.
Awesome. Let's hear it for Rob McDonald, everyone. Thank you so much.
Thank you very much.